Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Wednesday. Hopefully everybody's having a GGD, a great green day in the market. You know, always just the best for my viewers and subscribers. So for today, we're going to go over the overall portfolio value. Of course, the value by the metrics, seeing how we've done over time, as well as the buying power, which is purely dividends at this point. I will be adding cash by next Friday. I'll be adding a little bit of cash. Then, of course, the value by the metrics, going in to see if there are any deals within the portfolio. Now, the market's been pretty red as of the past couple of days, so I'm assuming that there are going to be a few deals. And I hope those will stick around so I can take advantage come Friday because I get paid on Friday. So I'll put a couple $100 into the portfolio and try to take advantage of whatever the best deal is for that set of months. Next up, we will take a look at our watch list and take a deep dive and see if there are any deals on the watch list that I can add, but most of the time I don't have enough cash just because Costco is a little bit pricey. So in Berkshire, I have cash set aside for a certain price. So Berkshire, I could buy at any time. Costco, I'm kind of waiting to see. It has dropped like $70 per share. So as of comparative to like last week, it's a good buy, but we'll see where it is once we hit the watch list. So jumping in for today, we're at $54,895.88, down $280 today, a 0.52% loss. Next up, for that 1 week mark, let's take a look. We are up $22.93, so about 0.04% return. Then that 1 month mark, we're up $2,700, about a 5.3% return. That 3 month mark, we are up $4,700, a 9.41% return. Then year to date, even with all the craziness, we are up $5,500 with an 11% return. That 1 year mark, we are sitting at $11,000 in the green with around a 26% return. And then all time, we're up $28,900 with a 111% return. So guys, as you can tell, in the short term, it looks really scary, right? With the past month, like look, it went way down. We were up to 56, down to 54. So we're down like $2,000 in a month. So short term, anything can happen, right? The market fluctuates. There's political stuff going on. There could be bad earnings reports. There could be just articles coming out about stocks that make them drop. Like there's a lot that fluctuates when it comes to stock price. So short term, anything can happen, right? But what we really want to do is find some of those high quality companies and take advantage of moments that are overreactive, because that's where the real money is made. Like we make good money with the dividends, right? That's the whole point. But the real money is to find a high quality company at a low price, at a low valuation. When the Mr. Market overreacts and takes a nosedive, you buy them there, you get a higher dividend yield. So it's like a double punch, right? It's like a double dip essentially. You get a really good stock appreciation opportunity. So say like Costco goes from $9.30 to $1,000, that's $70 per share, plus it pays $1.02 a share. So you get that dividend on top of that appreciation. So those are the deals that we're really looking for. And the issue is with high quality companies, they don't go on discount very often. You kind of have to wait for them. There's nothing wrong with adding, every single month to a certain position, but you want to have cash on the side to really take advantage of those big drops. So as of right now, we have a buying power of $99.74. That will be put towards whatever's the best deal within the portfolio. So jumping in for Realty Income, sitting at $56 a share. We have 5 shares, $280 worth of market value. Our average cost is right around $52 per share. 0.5% of the portfolio is in Realty Income. Today we're down $3. Total, we're up almost $20.50 with an 8.2% return. Dividend coming in on the 14th, so coming up here soon, of $1.34, which will put us above that $100 in free cash for the portfolio. So guys, Realty Income is one of my favorite positions. It will be one of the lower total holdings in the portfolio just because I like Apple, Google, and Visa more. But this is going to be essentially my quote unquote, like social security for the portfolio. This is going to be my steady Eddie income. This is going to be the one that I feel like has has a lot more, it's lower growth, but I feel like it's a lot more stable. They've never had an occupancy rate lower than 93%, even through COVID, the 2008 financial crash. So this is one of those that I expect steady income. I don't expect a huge growth rate. I don't expect it to go to like $500 a share. That's not what this position is made for. This position is just straight up to give me monthly cash flow and consistent monthly cash flow. So if it's giving me $50 this year, I want 52 to 55 next year. So that's the goal. And I'll keep buying more too. But my original position was about 170 shares. And I do want to build it back up to that position size because it was about $50 per share. And at that point in time, I was nearly enough to buy a share of Coca-Cola every month or a share of Altria every month. So that's where I want to be. I want to be back to that position, or a share of itself as well. So I want to be able to put money back into a certain position every single month guaranteed, or this can help me get back to like being able to put a share of Apple in the portfolio when Altria pays, or help when Visa only pays $20. So if I wanted to buy a share of, say, Coca-Cola, this would help me get to that point with that Visa set of months, simply because Visa doesn't pay as much as, say, a T. Rowe Price did or a Walgreens would have. So that's the long-term goal for this position, guys, just to build it back up to help with that cash flow on those lower paying months. Next up, we've got a Dividend King in Altria. We've got 320 shares, $18,000 of market value. Average cost is $47.27, 33.5% of the portfolio. So a third of my money is in Altria stock. Today we're down $150. Total we're up $3,300 with a massive 22% return. Guys, this is one of those companies that has been trading sideways or down for like the past, I've been investing for 7 years. I don't think I've ever seen this company up. Yeah, I don't think I've ever seen this company in the green. So I'm not thinking that, I'm assuming it's not going to last. I'm going to wait and see, but I'm not buying it at these prices. $10 markup. I'm not doing that. So I'm going to wait until it's around that $50 mark before I even consider buying it. But it does pay the biggest dividend in the portfolio. This company now is at a size and dividend payment that it can buy me a share of Apple forever with cash left over. So as of right now, it pays me about, say, $327 a quarter. So this buys me a share of Apple, and with extra cash can also buy me a share of Google. So it does its job, right? So I'm actually really close to being able to buy a share of Visa as well, which would be really cool. So this is one of those that I do want to add more cash to, so I could essentially buy a share, eventually buy a share of Visa and Apple. That's going to take a long time, but that's the goal for this position. Is this is going to help me, even if this has been what's been buying shares when I didn't have the free cash to do so. This has been what's been buying those higher priced stocks. So it does its job. Now I know this isn't going to have double digit dividend growth. I know this isn't going to, go to like 100 per share, but this is just like realty income. This is one of those that it brings in the majority of the cash flow, and it buys me a share of my favorite company every month guaranteed. As long as the dividend, even if it gets cut, as long as the dividend doesn't get cut by like 50%, I should be able to buy a share of Apple every single month. So it does its job really well. Next up, we've got Coca-Cola. Now, this one's dropped a little bit. Still not enough for me to purchase it. It's one of my personal favorite stocks. I drink a Coca-Cola product pretty much every single day. So this is a no-brainer for me. Not high growth, and I understand that there are other companies in the portfolio that are going to give me that high growth exposure. This is one of those that it's my favorite brand in the entire world. I drink it every day. I want to own it. So it is a dividend king as well. So it's got a long history of steady dividend growth. It's not the highest dividend grower, but it doesn't have to be. Coca-Cola's made millionaires just like Apple, just like Visa, just like Google. So, and honestly, I joke all the time with my girlfriend that Coca-Cola is going to make me a millionaire, but it's never going to do that if I never buy a share. So, but it's important to keep a positive mindset and keep yourself in a good headspace, especially when some of these stocks are dropping so much, guys. It's important to laugh about it. Like, oh, Coca-Cola is down. There's nothing I can do about it. I can buy more. But as of right now, Coca-Cola is too high for me. Even though the stock has dropped a little bit, it's still too high of a price. But I have 15 shares of this quality Dividend King, about $1,050 of market value. Average cost is right around $61 per share, so I'm not paying a $10 bump up. It's not worth it, just like Altria. 2% of the portfolio is in Coca-Cola. Today we are down 15 bucks. Total, we're up almost $142 with a 15.63% return. So guys, again, this is one of my personal favorites. I get a lot of flack online, Instagram, etc. for wanting to own this company, but I love it. So it's just going to be one of those that it's just going to keep getting added to. And it is important, guys. When you are investing in individual stocks, you can listen to people online, but really you have to be solid in your investing thesis and your reasoning, because if you did what everybody said to do online, you'd definitely lose money. Like most of the time, like most of the people online, they have opinions, but most of them don't invest anyway, or don't invest in the same companies. So a lot of times it's like you could listen, like if you listen to strangers on the internet, you're taking your financial advice from somebody who might not have any expertise in the matter. So stand firm in your investments, hold them like diamond hands, that shit, and, just keep going. You can't listen to everybody, because honestly, if I would have listened to everybody in my life, there was about 2 people in my life personally that told me to invest. It was my buddy Mitchell, who I'm still he's one of my best friends, and my stepdad was like, all right, how much you put in, whatever you put in, you can lose. Just don't be stupid about it. So, and now now I get passive income every single month. So stay true to your investments, guys. Next up, we got Apple dropping like a rock, $3, almost 1.3% today. 10 shares, $2,100 worth of market value. Average cost is right around 218 bucks a share, so a small buy here on Apple. 4% of the portfolio is in Apple. Today we are down 30 bucks. Total, we're down $11, 0.5%. Guys, still a buy for me here. Next up, we've got AbbVie at $213. 95 shares, $20,000 worth of market value. Average cost is $95.20. 37% of the portfolio is in AbbVie. Today we're down 40 bucks. Total, we're up $11,211, $124% return here on AbbVie. So guys, this is another one of those that, I've owned it for years. And this is one of those that Buffett actually sold. And when he sold it, I thought about selling it. But I said, you know what? I like the fundamentals. The cash flow is still growing. The dividend's doing great. There's no reason to sell it. I think it's a high-quality company. Nothing has changed economically or leadership-wise in the business. So to me, there's no reason to sell. And I'm selling on 123% return. I believe I would have had about a 40% return when Buffett sold it. It was like 20. I think it was like 32% when Buffett sold it. So I would have missed out on like an 80% return. So I'm glad that I listened to myself and didn't follow, those super investors like some people tend to do. Next up, we have got Visa at $331.90. So this is definitely a buy for me. 35 shares, $11,600 worth of market value. Average cost is $348. 21% of the portfolio is in Visa. Today we're down about $9. Total, we're down almost $600 with a near 5% loss here on Visa. Definite buy for me right now. Now, I don't know if it's still going to be. I don't know if it's still Google to be the number one buy for me right now, but Apple, Visa, and Google. So the three positions I want to be the biggest in the portfolio are all down right now. So I'm hoping to take advantage on Friday. But definitely a buy for me here on Visa. Next up, we got Google at $168. It's going up now. 6 shares, $1,000 worth of market value. Average cost is right around $194. Around 2% of the portfolio is in Google. Today, we're up $15. Total, we're down $150. So as of right now, dollar-wise, Visa actually beats it, even though it's a smaller drop. It's about a $16 drop instead of a almost $30 drop here. Dang, like $26 drop. So Google total is a better deal, but Visa has more of a loss because it's a bigger position. So still Google, as of right now by the metrics, is the stock I would be purchasing. But if I can squeeze it, I might try to buy a share of all of them. That's like $600, so that's a lot of money. It's like half my check. But I will take advantage of the buying opportunities, and at least one of them. I do owe myself a share of Apple, though, too, so I might have to ignore the deals with both Alphabet and Visa and just buy another share of Apple. We'll see. Then, of course, the watch list. I'm going to have to say it's a buy for Costco. It's been down, down, down. Like, look at that. For the past, what is it, month? Yeah, for the past month, it's down 12.5%. Lost $134 in like 4 days. Like, as of this morning, you guys had more money. Like a week ago. Yeah, as of this morning, it was like 940, which of course it's not going to be that much more, but like it. So Costco dropped today what Visa's done in a week. That's insane. Dang. So yeah, definitely, if I had $1,000 sitting around, I would add a share of Costco for sure. And then, of course, Berkshire Hathaway below 500. Definitely want to buy a share. In fact, I got Christmas money it was a gift from my stepdad. He gave me enough cash to buy a share of Berkshire, and I want to. I just was trying to be a good noodle and put it in my savings account because I wanted to make sure I had 3 to 6 months of income in there. But he's still picking on me every weekend. I go over to my mom's and asking me if I bought my share yet. So I do owe my stepdad a share of Berkshire in the portfolio, but I'll get it soon, Papa Matt. I just I want to try to be a little bit, a little bit smarter with my cash. But with all that being said, guys, thank you so much for watching. Remember to hit the subscribe button on my channel, That Dividend Guy. Thank you for all the new subscribers. Welcome, and I hope you guys enjoy the journey. I am posting shorts as well. I've been trying to do a couple shorts a day, plus a video a day. So if you guys enjoy the daily grind that I'm trying to give you more content, trying to be more consistent, hit the like button so I know you guys enjoy it, as well as hit the subscribe button if you're new here. And I will see you guys tomorrow on Thursday with another Robinhood portfolio update. Take care, guys.